Hello, this is Brad Harvey with Harvey Investment Management with our Q2 2023 market update. No surprises here, but we are at a fork in the road once again. Either we're in a bear market rally and things really are going to get quite a lot worse, or we're in a whole new bull market when it comes to the stock markets. I'd love to be able to tell you with absolute certainty which one we're in. I tend to think that it's more option A than option B. Why is that? Well, the government is continuing to raise rates aggressively in order to control inflation. We still have a major labor problem going on. There are far too many people that are not in the labor pool working. This is especially evident in the service sector. So let's go ahead and start going through some of the numbers. Remember, these are year to date through the end of the second quarter. First and foremost, the Dow Jones Industrial Average, which are 30 very large companies based in the United States, up 3.8% year to date. The Standard & Poor's 500 is up 1592. And the bright spot on the stock side is the NASDAQ 100. Obviously tech heavy. Just so you know, this has been fairly narrow. There are only a handful of companies that have done well, and they've all pretty much been tech companies. But the NASDAQ 100 year to date is up 38.75%. That is a big number, but keep in mind they're still well below their all-time high, and that was the worst performing equity index last year. In terms of broad market, the Russell 3000 year to date up just under 15%, and the small caps are up just over 7%. So that rounds out the US stock market. Non-US, foreign large caps, developed markets as we call them, year to date up 10.4%, while emerging markets are up a little over 4%. The bond market continues to struggle as interest rates continue to climb up, although the 10-year yield is still hovering around 3.8%, which is essentially where it ended last year. So we're seeing interest rates going up, but really on the short end of the curve. Real estate, if we look at investment-based real estate, that REIT index year to date is very flat. It's up 1.26%. Certainly not setting the world on fire. Commodities also down now. The overall broad-based commodity index is down just under 8% year to date, while gold's up 5% and oil is down 12%. Now this also means we've got more turmoil coming. Remember, inflation is largely food and energy. Precious metals tend to be in there as well. We're not seeing them behave the way they should in a normal inflationary cycle. So stay tuned, we will see. This is Brad Harvey with the second quarter market update for 2023 Harvey Investment Management.